Hello everyone, and welcome to this presentation on how to increase your risk-reward ratio. Welcome, my name is Stephen Primo, the president and founder of Specialist Trading, and if you aren't familiar with us by now, it's time to tell you that we are a educational company. First and foremost, that's really our goal. That's what we're all about. We just want to teach you and empower you with all the things that I've accumulated in my 38 years of trading so that you can ultimately make your own trading decisions. See, it's our opinion at Specialist Trading that the reason why most traders fail is because you're relying on someone or something outside of you to tell you what to do. So what we do is we empower you with all of this information that I've accumulated, and hopefully you can, with my mentoring and with trading right alongside of you, you'll be able to have the confidence to make your own trading decisions and not have to rely on trading rooms, chat rooms, or some particular trading system that you've been following that isn't producing the correct results. This is what we do. Once again, this is the way I was taught. I have 38 years of background behind me. I started out on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. I traded through the crash of 1987 and the bull market that followed. So I've seen and traded through just about every market imaginable, and I know what works with consistency and what doesn't. So my goal is really to teach you all of the things I've accumulated so that you'll be able to make your own decisions. And today I'm going to be sharing with you a couple of great techniques for risk-reward ratio, how to increase your risk-reward ratio, because it's a very important piece of the puzzle to have that included in the money management of your particular strategy or system. But many people are implementing it incorrectly. So get out your pencils and paper and be sure to write down a bunch of things here, because I'm going to be sharing with you 2 particular techniques that are mainly privy to only the people that are in our 7 Secrets of Money Management course. I'm going to be taking these from our 7 Secrets of Money Management course and sharing them with you today. But before we begin, we're required to show you a disclaimer, so please take a moment to view this. I'm going to show you a lot of performance results using these particular money management techniques. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we are required to show you this. So as you're taking a look at our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. Here is our handle right there, abbreviation for Specialist Trading. It's at SPCLSTTRADG. You can get a lot of free information on a daily basis, anywhere from daily financial wisdom, different tidbits and sayings I've accumulated in my years of trading, as well as signals, current signals that were generated from our strategies that we post a day or so after they were generated, because once again, our members are privy to those first. Now, there's a lot of just instant, information on Twitter, but we also give a lot of things that you can stay and watch on our Facebook page, such as videos and other bits of information. So our sister site, Pro Trader Strategies, has put together a Facebook page for us. So please like us on Facebook, and once again, there's a lot more detailed information there that you can find out about us, a lot of different learning lessons as well. Now, as I stated, we are first and foremost an educational company. I know a lot of traders are looking for the holy grail, and you go to a website hoping that they will tell you where to buy, where to sell, what to buy, what to sell, what's the best time frame, what's the best market. Well, that goes entirely against everything that we teach. What we do is we just provide you with high probability information, things that have stood the test of time, and then mold and work them with you so that you can be able to trade something that feels comfortable to you. Because the reason, once again, is why most traders fail, in our opinion, is because you're trading something that really isn't a part of your own process. You don't understand it. You don't feel comfortable with it. Maybe it's too fast. Perhaps it could be too slow. So we really don't feel that every trader should trade the same way. Therefore, we present you with this information. We're there with you every step of the way, and hopefully we can format it to meet your needs. So that's why we say our goal is not to trade for you, but our goal is to teach you how to trade with the specialist edge. Now, one of the most important things is money management with any trading plan you have. But most people, if you're trading some type of system or strategy, usually do not have the proper risk-reward ratio involved. In other words, you're risking too much in order to make the proper amount, and over a while you're not making enough to carry over for your losses. So ultimately you're failing, and you may have a strategy that works okay, but the risk-reward ratio isn't adequate enough. So we're going to show you, without changing any strategy, without changing anything in terms of the basic format of the trading plan, how you can increase your odds for success with these simple techniques. Okay, now before we begin, if you're new to my presentations, we have a question and answer period at the very end of the course, of the class. So please, if you have any questions, kindly write them down or remember them, and we'll go over them in the next 20 or 30 minutes, okay? But I won't take any questions while we're going in the process. That way we don't slow down the webinar. And the most important question that people ask is this being recorded? Perhaps you have to leave early, or maybe you had technical difficulties throughout the webinar. Yes, just go to Pro Trader Strategies, request a link, and they will send you a link to this recording. Okay? All right, let's begin. And here's what you're going to learn today. Once again, we are an educational company, so we're going to conduct this as if this were a class. And we're going to first share with you an example of an acceptable risk-reward ratio trade. All right, we're going to show you what is perfectly admissible and what you should be looking for. It's not a fantastic risk-reward ratio, but it's what, you know, it's the basic format or the benchmark of a trading plan. But unfortunately, we're going to share with you what most trading plans have, and that's a low risk-reward ratio. Unacceptable. It's not suitable because over time, you know, you may have some winning trades, but over time, you're most likely going to go in the loss column because your losses will exceed your gains. But the good news is, I'm going to share with you and show you a technique that is in our 7 Secrets of Money Management course, how to increase your risk-reward ratio by simply altering your entry. But it's a specific plan. We're not going to just say, oh yeah, well, instead of buying here, I guess I'll buy here. It's a specific structure, a plan to increase your risk-reward ratio. And then lastly, I'll share another technique from the 7 Secrets of a Stock Exchange course on how to increase your risk-reward ratio by altering your exit. But that is a specific plan. All right, we're not just going to leave it up to discretion and say, well, I want to increase my exit, so I'll just, instead of making 3 points, I'll make 4 points, okay, just off a whim. No, there's a specific plan to this, a specific structure, and we'll show you how to do that. All right, so once again, should you have any questions, kindly wait for the next 20 minutes or so, and we'll get to them at the very end. And yes, this is being recorded. Let's start off right away with a proper risk-reward example trade. And let's say you purchased 100 shares of XYZ Corp, fictional Corp, XYZ Corp, at 20, and you place a stop-loss order at 15. Well, if you're stopped out, if the trade goes against you, you'll risk a loss of 5 points, okay? Stand to reason. If we look at this fictional chart here of XYZ Corp, all right, we see that we would purchase it right here on this little pullback or sell-off at 20. We got long on this day. And then once we entered into the trade, we placed a stop at 15. So if the trade rolls over and goes against us, we're going to lose 5 points on 100 shares, okay? Now, let's also assume that you believe, in other words, you have a discretionary belief that the price of XYZ will reach 30 in the following months. Say you know something about the company, say you've been tracking it, the fundamental news, the earnings, whatever, but you think it's going to reach 30 in the next few months. Now, in this case, you are willing to risk 5 points in order to make an expected return of 10 points. In other words, we bought at 20, we place our stop at 15, so we're willing to risk 5 points if we're totally wrong, but if we're right, well, we want to get out with a profit of 10 points. So we'll risk 5 to make 10. Now, since you stand to make double the amount that you've risked, this trade would be said to have a 1-to-2 risk-reward ratio. And this is the basic thing what you're looking for. If you go to any Money Management 101 course, any beginning instructor, this is what they say you should always have. You should, in order to you know, be substantial and sustain yourself in the markets in any type of trading or investing, you should make double of what you risk. So here's the plan. We get in at 20, we place our stop at 15, and we want to exit with a 10-point gain, and ultimately we get there. So we made 10 points over time, and we had a risk-reward ratio of 1-to-2. Now this is all well and fine. This is the way most investors, you know, structure their trading plans, because you know, you kind of decide, well, I'm you know, risking so much, so I want to at least make twice or at least make 3 times, and that's fine, but that's a discretionary exit. You're just basing it off of how much you're risking and saying, well, I'm going to make 2 or 3 times that. But many traders, especially what we deal with, our students and all members, are traders. They're in the market maybe two weeks to perhaps a couple of minutes, and so they base their trading decisions based off of strategies or systems, which actually tell them where to enter, where to exit, where to place your stop, where to get out. And so everything is predefined. But the only problem is what if you trade a strategy with a fixed exit and it doesn't have that good of a risk-reward ratio? In fact, we even have some strategies at specialist trading that do not have that 1 to 2 risk-reward ratio. As we see here in this example here, a weekly chart of Apple going to the beginning of the year. Now, this was a actual signal, one of our strategies, strategy number 4, I believe. Now, this strategy generated a buy signal on this day right here in the second week of January, I believe. So what the strategy calls for is to buy the next day once you traded at this level at 113. The strategy also calls for you to place your stop at 105, just below the setup bar. All right. And then lastly, your exit point is at 121. So this is all predefined. You know this prior to even pulling the trigger. You know, prior to even entering the trade, you're getting in at 113, you're placing your stop at 105, and you'll exit the trade at 121. Now, if we look at this trade, it actually worked out all right. In fact, we made 8 points. Not a bad trade. Now, you could have traded this with options. You could have traded this with actual stock. It's up to you how you want to implement it. But it was a profitable trade. Now, see, the beauty of what we do at specialist trading is that we have strategies, such as strategy number 4, that are extremely consistent. Even though we don't keep records, we don't, because these are strategies, they're not systems. Our clients and our members, we have hedge fund traders as well as first-time traders, tell us that this strategy has a very high level of consistency. So when you're trading a strategy that has a high level of consistency, you don't need a very high risk-reward ratio, because most of the time you're going to be right or correct on the trade. But if we look at this actual trade here, we see that we risked 8 points to make 8 points. So that was a 1-to-1 risk-reward ratio, which is not acceptable in the standard world, because most trading strategies are only correct maybe 50% of the time, half of the time. And so if you're trading this strategy that is only correct maybe half the time, over time you're not going to make any money. You're just going to tread water. You're just going to be basically making what you lose and losing what you make. And conversely, if you have a strategy that is less than 50%, which many strategies and systems are, they only make anywhere from 40 to 50%, over time you will lose money trading with this risk-reward ratio. So here's the good news. Let's say you particularly like this style of trading. It meets your your requirements in terms of your risk parameters, in terms of how you feel. It makes you feel comfortable. You like trading this style, but you don't want to give it up just because the risk-reward ratios are not that acceptable. So here's what we can do. We simply want to alter our entry. All right. So this is what we take from secret number 5 of our 7 secrets of money management course. Secret number 5 simply states that you can control the risk-reward ratio of any trade, and virtually of any strategy actually, by altering its entry point. So see, what most students do is they say, well, okay, I've taken some courses, I've gone to some chat rooms, I've read the blogs, and everyone says I should have better than 1-to-1 risk-reward ratio. I should have 1-to-2 or 1-to-3, 1-to-4, and this particular strategy only generates 1-to-1. So I'm just going to pass it. I'm not going to purchase it, or I'm not going to trade it. It's not good for me. You don't have to do that, because you can alter the risk-reward ratio simply by altering its entry point. Let me show you how to do that. All right, so here was the standard rules for this particular strategy. You enter at 113, place your stop at 105, and you exit at 121. Now the strategy calls for to enter the day after the signal was generated. So the signal bar is right here. The strategy calls for you enter the next day. So what we want to do is, sure, we're going to enter the next day, but we're not going to enter at 113. What we're going to do is go to the day prior to entry. This is the setup bar or the signal bar. And you just want to measure that, all right? Measure the range, whatever it is, how many points that is. And from the very top, you just want to go down 25% of the range, or a quarter of the range, and that's your entry. So instead of entering where your normal entry would be, you simply decrease the entry down to 25% from the top of the bar. And instead of buying at 113, we've now bought it at 110. All right, so since we bought it at 110, we had a profitable trade. Instead of making 8 points, we made 11 points. But better than that, it's not about how much we made, it's about how much we're risking. Instead of risking 8 points, we're only risking 5. So we risk 5 to make 11. And that's close to, if we round it off, that's a 1-to-2 risk-reward ratio. So just by simply lowering our entry point. Now see, what a lot of people do is they say, well, yeah, I've done this before, but they don't know where to place their entry. It's just a discretionary move. They say, well, I think I'll put it down a couple of points or down here. That's just a discretionary. You're just basically kind of hoping and praying that it goes down there. We have noticed that over time it comes to specific points within the bar prior to entry or the setup bar that you will get many times the price of the stock the next day will come down at least 25%. So you can place your order, place a limit order to buy at 110. Now this is just one technique. You can also place it down 50%. We've noticed that many times the next day or even the day after that, you will come down half the distance of the range of the setup bar. So instead of buying at 25%, you could say, I'm going to buy it at 50% of the setup bar. All right. So now instead of buying at 113, you have now purchased it at 108. And instead of making an original 8 points, you've made now 13 points. But more important than that, instead of an 8-point risk, you've now only risked 3 points. You purchased at 108. Your stop loss was 105. So now your risk is only 3 points on this trade instead of 8. And so now you've constructed a 1-to-4 risk reward ratio. All right. You've made 4 times what your risk is. And then lastly, the last setup place, obviously if we've been down 25, 50, we can go down 75% from the very top of the range. Just measure 3/4 the distance of that bar, and you can place your entry at 106. All right. So now instead of making an original 8 points off of the original entry, well, guess what? We almost doubled that. Now we've made 15 points off the same stop placement, off of the same exit placement. We've just altered our entry. But even more important than making 15 points, we only risked 1 point on this trade. All right? So we risked 1 point to make 15 points. So our original risk-reward ratio was 1-to-1. By virtually using the same stop and exit rules, we've now just altered our entry, and we've now increased the risk-reward ratio by 15. So now it's 1-to-15. So we traded the same strategy, we just altered the entry point. And you see there's a structure here that so many people, will, especially new students, will say, well, Steve, there's nothing complicated about this. You know, I'll just, instead of where I usually enter, I'll just go down a point or two. But there's no consistency in that because there's just a basic, you're just kind of telling yourself, well, I guess, you know, a half point seems like that's the range lately, so maybe I'll enter. And it's just kind of, you know, whatever you feel the day to be, how much range it should be. You have to have some structure. Whenever you're trading, there should be some structure. It shouldn't be, even when you're using discretionary tactics, which we teach as well, there should be some structure into that. It just shouldn't be hoping and praying that we come down to this level. So there's some structure here. It's all based off the bar prior to entry. So if you entered on this bar, it's the bar prior to that. You measure the range of that bar from top to bottom. And if you're entering, you simply enter down 25%, enter down 50%, and enter down 75%. Now, obviously, you're going to get more trades, more setups if your entry is only down 25%. If your entry is down 50% of the bar, well, you may get more, you know, you may get more or less. It's kind of average. You don't know. It's just kind of like in the middle. It's a median number. Obviously, if you enter down 75%, you're going to get a great risk-reward ratio if the trade works out. If it doesn't work out, you're going to get a minor loss because you have very minor risk. But more than often than not, you will not see the price go down there that much. So it's up to you. Experiment with it. See which works best for you. In the beginning, only paper trade this method, but you'll see this works on stocks. It works for futures trading. It works for Forex trading. I'm going to show you some more examples, but let's show you the other side of the coin if you wanted to go short. Here is an example in TGT, on another one of our trades to go short here. This was an actual example to go short. You would have entered right here on this bar because this was a setup bar right here. This was the day the signal was generated to go short. And when this bar closed on this day, you entered short the very next day down here. You sold short at 82.75. You placed a stop at 84.25, a point and a half higher. And your exit point, according to the strategy, is 81.75. So this trade worked out great. Only took 2 days. You made a point in 2 days. The only trouble is, remember once again, trading 101, people get all scared. They go, but Steve, this is a terrible risk-reward ratio. I am risking 1.5 points to only make 1 point. Now, once again, if you have a strategy that is very consistent the way most of our strategies are, you don't really have to pay so much attention to this. But if you've been trained and it's been instilled and brainwashed in you that you must have a high risk-reward ratio, which is good, we're not saying it's bad, but it's mainly for strategies that don't have a high level of consistency, well then use this technique, all right? Normally you would simply enter on this bar right here. Remember, go to the previous day, the day before, measure from top to bottom, and in this case, since we're shorting, we want to not enter at 82.75, but go up 25% or a quarter of this range from the very bottom to the very first 25%. So instead of selling at 82.75, we now sold at 83.25. Now, instead of making a point, we made a point and a half. But more importantly, instead of risking a point and a half, we only risked a point. All right, we sold at 83.25. Our stop is 84.25. So if we were stopped out, we only would have lost 1 point. And we've increased our risk-reward ratio to 1 to 1.5, which is okay. It's not great, but it's okay. All right. If you're looking for more, well, instead of 25%, we just simply raise the limit to 50%. So instead of selling much lower here at 82.75, we're now selling at 83.5. And now we made a point and 3/4 in 2 days. But more importantly, we're only risking 3/4 of a point, half of our original risk. All right. And now our risk-reward ratio is rounded off to 1 to 2. So this is a very acceptable risk-reward ratio based off the structure that we're teaching you. Now, if you wanted to go for even more, once more, you could go to 75% from the bottom of that bar, and that would be right here. You would have entered on the second day. Sold at 83.75, and now you've made 2 points in 2 days, and more importantly, your risk was only a half a point, 50 cents. So now, just by this simple altering, going up to 3/4 from the bottom, you've changed the risk-reward ratio from 1 to 4. So now you've made 4 times what your risk was. We still have the same exit. We still have the same stop placement. Okay? All we've done is added some structure on how to enter our trade now. Not based off discretion or what we feel today. Or feel, well, I think I'll put it up a point or I'll put it up 3/4. It's all based on structure that we have shown that has a high level of consistency if you're looking for high risk-reward ratios. Now, here's an older chart of the ETF based on the Dow Jones Industrial Average. Okay, this is a weekly chart going back a couple of years. Here was another one of our strategies. We applied the same techniques here. In 2 weeks, we had a nice gain on this ETF. All right, but once again, just looking at this, look at the risk-reward ratio. Not very good at all. It seemed like it was 1.5 to 1. Basically, you entered here and you exited with a nice gain in a couple of weeks, but look at the risk. It was much larger than the profit potential. So you could always apply the technique we just shared with you, buying down 25%, 50%, 75%, you would have increased your risk-reward ratio. But many times we have students that say, Steve, I love your strategies. I'm applying this with your 7 Secrets of Money Management course and all the other things. But oftentimes I'm still making maybe I'm making 2 or 3 times more than I risk by applying these great techniques. But sometimes I just leave so much money on the table. I could be making 20, 30, 40 times what I'm risking, because oftentimes these strategies are so good, these techniques are so good, the markets just keep going and going and going. So how can we apply another technique to increase our risk-reward ratio? Well, this is secret number 6. In our 7 Secrets of Money Management, secret number 6 says you can control the risk-reward ratio of any trade by also altering its exit point. But how do we do that? Is that a discretionary thing again? And say, okay, instead of making 3 points, I want to make 20. It doesn't work that way, because we're basically just hoping and praying it goes to 20. All right. So there's no real structure there. Once again, it's just pretty much hoping and wishing that we make 30 times what our risk is. But it's not based on anything other than what we'd love to see. Sure, we'd all love to win the lotto tomorrow, but most likely it's not going to happen. So we have to have some structure. How do we do this? We trade with probably our most popular and one of our most powerful trend identifying tools. It's the PET-D. The PET-D is a color bar algorithm. I was introduced to this some 30 years ago on the floor of the exchange. It's a simple formula that you must calculate. It's a proprietary formula. We keep it in-house. We don't share it with anyone, but it's very simple and powerful. And so we don't want to make it exclusive to the public, but we share it with our members. All it is a color bar algorithm that changes the bars to green if you're in a strong uptrend and changes them to red if you're in a strong downtrend. So rather than try and guess how long you should stay in the trade, this does it for you. Let me show you what I mean here. If we look at this example in KSS, we had a buy signal generated by one of our strategies, and had you just used the common exit rules, you would have had a very nice trade here. In 1 week, you would have made maybe 3, 4, 5 points, okay? But what if you said, well, you know, Steve, I like to trade multiple lots. Maybe I would have used the standard exit just to sell half my position, but I would have liked to use the second half to let it ride, because who knows, maybe I could have made 5, 10, 15 more points. Well, the way to do that is to add the pet D. Once you apply the pet D, it'll either change the bars to the color red or the color green. Now we've entered the trade, we've exited half our position, and the bars are all green. As we see here in the following couple of months, the stock continued to go higher and higher up until April and continued to stay green. So the entire time we just remained long until our very first red bar, as we saw here just last April, okay? So what does this tell us? Well, one of the techniques we have, one of our stop placement techniques using the pet D is, once you see your first red bar, if you've been in a trade a long time, that's where you place your stop. Now the stop can be a quarter point below, can be half point, a full point. It's up to you, but that's where you should start protecting yourself, because the pet D tool is telling you that most likely this trend, this long run, is going to be ending very soon. You know, it's not designed as a strategy. It's not designed to get you into the top and get you into the bottom. It's not telling you where to buy and where to sell. It's just giving you guideposts, all right? Giving you benchmarks of where you should be in and where you should be out, because it's really fine-tuned to tell you when the trend is about to change. So here's your first warning. So you would have placed your stop here, want to lock in the rest of your profits, and look what happened, okay? So that's the beauty. We just changed our risk-reward ratio by applying the pet D, because it kept us in the trade a lot longer. Now, are all trades that you're going to be in going to be, you know, generating an extra 20, 30 points? No, we don't promise that. We don't guarantee that. No one knows how high or how low a stock will go. But if you're like the type of trader that likes to squeeze as much profit as possible, this is a great technique for doing that. Here's another example in HCM. This was an actual signal generated by one of our strategies just last May, just a month or so ago, to go short. Now, just looking off of the standard format of the strategy, you had a really nice trade here, about 3 or 4 points in a week or so. All right, but what if you thought HCM was going to go lower? What if you wanted to squeeze as much profit as possible? You simply add the pet D. Now, you entered the trade here, and once you entered the trade, the bars remained red. This is telling you that you're in a short-term downtrend. So you continue to stay short, but right here in the second week of May, the first green bar appears. So what does that tell you? It tells you that's where you may be having a change in trend. So you have to protect yourself. We're not saying that it's going to be going up, but the pet D is discerning that there might be a slight trend change here. So we should protect ourselves just in case it starts to go back up. So you place your stop right here. And where you place your stop, once again, is up to you. We're not a systematic company. We don't keep records. We don't keep, systematic win-loss, records of every trade we do, of every time frame, of every market. We're an educational company. So we let you decide. You know, we give you guideposts and we mentor you along the way. But if you want to place your stop a half point above or full point above or 2 points above, it's up to you. But your stop should be somewhere above that green bar. And as we see on the next day, well, guess what? The stock went lower. So you're okay. But coming into June, this last month, we had another green bar. So you just now place another stop. And the pet D quickly went back to red again. It was telling you that, well, the trend never kicked in and we're still in a downtrend until just last week we had another green bar. So you place your stop here. See how you're locking in all of these profits here, and went even lower. Now, I know a lot of people say, well, Steve, what do I need the pet D for? I could just look at higher highs or higher lows to lock that in. Sure, that's perfectly admissible. That's one of the techniques we teach and use. We use different variations of that. But sometimes the pet D is better than that. As you see right here, had you used that technique of just placing your stop above higher highs or higher lows, you would have been stopped out right here on this little short-term pivot high, and once you went above it, you would have probably covered your short, and look what happened. Another example here, if you would have traded above it, you may have been stopped out. And then even right here, here was a short-term pivot high. If you place your stop there, you would have been stopped out and missed all of these. So this is why we say the PET D is a much better tool for locking in those long-term gains. We see this on a 5-minute chart. This was on the 22nd of June. This was just last week on a 5-minute time frame. So I don't want you to think that this only works for stocks or ETFs. We can apply this to any market, and as you see here, any time frame. A 5-minute chart of the E-mini future. Our strategy generated a buy signal here in the first 15 minutes coming into that day. And let's say you took the standard exit. Well, you maybe would have made a point or two on this trade. Not a bad trade for the first 10 or 15 minutes of the day. But if you're a trader who wants to lock in as many gains as possible, you simply apply the PET D, and you see here that all the bars are green. And when you had the very first red bar, that's telling you it's time to protect yourself. And that's where you'd place your stop, anywhere you decide, just below that. And look what happened. Okay. Now that was just last week. Let me show you what happened yesterday to show you how versatile this technique is and also how versatile our strategies are. This is an actual sell signal yesterday in the E-mini as well, that large sell-off we had on range bars. I know a lot of traders, intraday traders, like to trade range bars. Here's a three-point range bar of the E-mini S&P. Now, right here, roughly around 7:30 Pacific time, one of our strategies generated a sell signal. All right, now had you just taken the standard trade, you maybe would have made 3 to 6 points really quickly, and that's a nice acceptable trade there. 3 to 6 points, that can be anywhere from $150 to $300 per contract, depending on how many contracts you have in a very relatively short time. But if you thought the market was going much, much lower the way it did yesterday, well, you would have wanted to stay in the market. How can we have the assurance to know to stay in the market as long as we can? We apply the PET D. And as you see here, here's where we entered the trade, and the market continued to go lower and lower, and as long as the bars are red, that's where you continue to stay short. There's no reason why you're going to buy if the bars are red. Now we had our very first green bar here, so you're going to place your stop half point, a full point above here, and the market went all the way down to the very close of the day. So you could have held on to this trade till the very end of the day yesterday and made 20, nearly 30 points. That's $1,500 per contract just on that sell signal and by applying the PET D. We can also apply this to the currency pairs. Here's a recent signal to go long the euro yen. One of our strategies to go long, as you see here, we applied the PET D, and on the very first red bar, we signaled an exit. And this was just this last couple of weeks here in June. So until we get another buy signal, we'll have to see how this pans out. And here's a weekly chart of the Australian dollar. Excuse me. We had a sell signal generated last September. All right, the bars turned red on that. And the entire time, the Australian dollar has been going down into the beginning of the year, all the way down. You could have stayed short until end of April, beginning of May, and until then you would have been out of the short side. Now, since the bars are green, you're looking for buy setups. But you see how this works in any market, any time frame. The beauty is, if you couple these two techniques I shared with you today, you're going to really increase your odds for success by giving you a higher risk-reward ratios by altering your entries and by altering your exits. So let's review before we go to any questions you may have. Secret number 5 in our 7 Secrets of Money Management course. Remember, you can control the risk-reward ratio of any trade by simply altering its exit point. So just because you have a strategy that doesn't produce a proper risk-reward ratio to you, or you're seeing it that it says, well, you know, I like the way it's based, I like the plan, but boy, the exits it generates just aren't enough to cover the risk. Well, use this simple technique that we have in our 7 Secrets course, and you can create a better risk-reward ratio. You know, 1 to 2, 1 to 3, 1 to 15 we even showed you. Remember, if you get a signal that's generated to buy, all right, on whatever bar it is, this could be a 5-minute bar, it could be an hourly bar, it could be a monthly bar, it doesn't matter. And let's say that that's the setup bar and you generate a buy signal, and so you buy on the next bar. Well, all you have to do in order to use this technique is just simply measure the top to bottom, and you want to enter your buy order, not buying on the market on the opening of the next bar, but down 25% or down 50% or down 75%. All right. Now please remember, points to remember is you'll get more entries at the 25% level. Stands to reason, because many times if you have a proper setup, many times the trade will just take off, but you'll come down enough to get you in at 25%. Half the time you'll get in at 50%, but a lot of the times you'll just barely squeeze in with trades here, but you won't get a lot of them. The good news is you have very, very small risk. So it's up to you. Play with these. Paper trade, see which one works best for you. That's secret number 5. Secret number 6, you can control the risk-reward ratio of any trade simply by altering its exit point. Now, surely you can do this with any strategy or system you have right now. All you have to say is, well, instead of getting out at 50, I'm going to get out at 60. Anyone can do that. But what's it based off of? It's based off of just hoping you make more money. You have to have something that's based off of some structure, based off some trading technique that has consistency to it. And that's the pet D. Remember, if your trade is really taking off to the upside, the pet D will continue to color the bars green, as you see here. All you have to do is simply wait for the first red bar, and that's where you place your stop. So you're going to lock in a lot more gains. Conversely, if you're short a market, whether you're short the options, whether you're short an odd lot, doesn't matter what market, it could be currency pairs or the futures markets, all the bars will start to be colored red, as you saw in the examples we just showed from yesterday. All you have to do is wait for the first green bar, and that's where you place your stop. Now, we're going to have a attendee special for all the people attending today. This is a very brand new course that we're putting together for all the attendees. This is something brand new. We've never had this before, but we have people that have purchased these separately that have told us the great success they've had. And we're going to be combining the 7 Secrets of Money Management course. This is detailed instruction with 8 videos on all the different money management techniques and different methods you can think of, anywhere from risk-reward ratios, as we just went over, just 1 or 2 techniques today. We have many more risk-reward techniques. We also have many more stop placement techniques. We have a technique that will tell you how many shares or lots to trade. All of these things corresponding with money management. 8 videos altogether, plus my correspondence with me, my personal correspondence, and we're going to combine that with the pet D. That's the Primo early trend detector. All right, that's the roadmap for any market. It's a proprietary color bar algorithm. This includes the add-on. So this is the add-on that you can apply to your charting package that will automatically change the bars from green to red. Now, the best thing about this is that it also includes 2 continuation trading techniques and 2 pullback trading techniques, as well as the stop method we explained to you earlier, as well as my personal correspondence. So this is brand new. What we're doing is we're putting these together and calling them our Money Management Pet D Combo. All right? 7 Secrets of Money Management course along with the Pet D. We've had members who have purchased this separately, told us the great success they've had combining these 2 together. Now, these methods are so popular, but they're extremely powerful. If you just bought them individually, it would cost you close to $5,300. That's how powerful they are, and that's how much information that's included with them. But we're going to drop this for you. We're going to give you a great discount. In fact, we're going to drop the price down roughly 25%, down to $39.95. And the best thing about this deal we have for today is that this includes payment plans. So if you can't come up with $39.95, no worries. You can call up one of the people at Pro Trader Strategies. They will structure a payment plan with you. All you have to do is put down a small deposit and you can have instant access. So here's how to get this great deal of the 7 Secrets of Money Management course along with the Pet D. You can contact Pro Trader Strategies by simply emailing them at trading@protraderstrategies.com. You can call them directly at area code 310-598-6677. And if you see right there on the very bottom, that is the link that you can go directly to the sign-up page to get that deep discount. But please remember that that link, as you see right there, is not live. You have to copy and paste that onto your browser. So if you really want to just go there automatically, if you look in your chat box, in the GoToWebinar chat box there on the right-hand column, you'll see that they have posted that. And you can just click that on, and it will automatically take you there. Now, once again, We are offering this for the very first time. This is something brand new. We've had a number of our students who purchased these separately for close to $5,500. We're dropping this down 25% roughly, and this is for the first time only. We're offering payment plans. So if you want to use these money management secrets that I've accumulated since my trading days on the floor of the exchange, as well as the Pet D, this is a great, great offer to get these this money management combo, okay? So I'm going to leave this information up for you right now while I open up the question and answer box, and I want to thank you for holding off on any questions as I open this up. Let's see. Jay asks, trying to get 75% retracement increases the risk of not being in the trade at all. Well, see, Jay, that's not a risk. Remember, risk is only defined as how much money you lose. See, if you look at risk as if missing a trade, that's the wrong mindset. That's more of a gambling mentality, like, oh, I missed the horse race. I didn't make it there on time. See, with trading, you have to let go of that mindset and know that there's setups happening all the time. So don't ever come as if there's not enough oxygen to breathe. That's what we tell our students. Thinking that way is similar to saying there's not enough air to breathe. There's only so much limited oxygen, so I have to be very careful that I don't miss another breath. There's always going to be setups, so don't think that way. Okay. And if you don't want to, if you can't get rid of that mindset, well, then only place your trade down 25 or 50%. You have much better odds of getting into those trades. Okay. Jeff asks, will this presentation be available later? Actually, Jeff, it's going to be, it's recorded. It has been recorded. So there's the information. Just contact Pro Trader Strategies and they can set it up for you very easily. Jerry says, very good, simple strategy. Obviously, the key is the setup bars. How is the setup bar determined in your weekly Apple example? I have to be a member to get the answer. Yes, Jerry, I'm sorry, because the setup bar is based off a number of rules and requirements that need to be met. It's not complicated. I don't want you to think that there's 30 or 50 rules that all have to come together. It's only based on 4 or 5 rules, but that's what makes a strategy. And then once those rules are in place, we usually buy on the next bar. But trust me, you don't have to just have that strategy. Let's say you're waiting for earnings on a company that you've been following fundamentally. Your strategy or your trading is based off fundamental news. Okay, so you're waiting for earnings. The earnings come out after the close, and they're okay earnings. They're not bad. They're not great, but they're not bad. So this triggers good enough for you to buy it. Okay, so all you have to do is the next day when you'd buy at the market, instead of doing that, just look at the range from that day, and all you have to do is go down 25%, 50%, or 75%, and you could enter the order the same way. It doesn't really matter. Okay. And as you see here, this works on, if you're asking about if this works on Apple devices, yes, the video will work on Apple devices and works on MT4 as well, okay? Jeff is also asking which platforms work for Forex. Will the Pet D work? Yes, the Pet D works for the 7 Secrets is just an educational course, but the Pet D works for TradeStation, NinjaTrader, MT4, Metastock, and also it works with Thinkorswim, but you have to edit it a bit by taking the data from Thinkorswim, or Ameritrade I should say, and then applying it to NinjaTrader. I also believe it works on FXCM as well. But those are the major platforms, and we've had so many testimonials. I mean, if you do a Google search on all the people that have done well trading these two courses together in conjunction with each other, that's why we put this package together, because we have so many people that have told us as students that it's really helped them. The money management along with the Pet D put together has really increased their odds for success, okay? Hello, Weger. Hello, is a student of ours. He says that he bought strategy 3 and 4, which work best in trending markets. Do you have some strategies that work in sideways markets? Hello, Ahmad. The only trouble is most of our strategies are based off of trending markets because that's where you get the highest probabilities for success. We don't really have a lot of strategies that are just based off of choppy markets, because in my 38 years of trading, really there's not a lot of consistency there. We're trying to, for non-trending markets, we're trying to stay away from those, and most of our techniques and strategies keep us out of those. I'm not guaranteeing that you're out of them 100% of the time, But we're out of those. If you've, once again, look at any of the blogs and any of our traders or our students, they keep us out of those conditions a lot of times. And so you don't have to get whipsawed a lot. So unfortunately, most of our strategies are really based off of trending markets because that's where the most probability for higher gains are. So that's what we're really searching for, okay? Next question, Steve, does the PET-D predict the trend in advance? No, it's not in advance. That's a good question. It's not something, it's not predictive in terms of, you know, it's like a crystal ball where it predicts the future. It's just really finely tuned. This formula is really fine tuned where it, through this, you know, formula that we've constructed, it's able to discern if it's sensing a trend change, okay? In other words, the market tells us what it's doing. We just have, through this formula, been able to sense it quicker than other tools and other indicators. So many times we're in quicker, but it doesn't really predict it. Even though I know it says it's an early trend detector. So in other words, it detects the trend a lot earlier than other techniques or platforms, but it doesn't predict it, okay? Because as you saw in a couple of those examples, you know, a stock had gone up very high and then it started to roll over and then we saw the first red bar, you know, so if it predicted it, it would have got us out at the top, and we don't believe in that. We're you know, we know that we're not trying to get in at the bottom or out at the top. We're just trying to catch the large part of that large move, okay? Let's see. Dejan asks, I bought strategy number 4. Do we need to wait entry bar to exceed the high or the setup bar and then to enter down 25% below, or just enter 25% below? That's a good question, Dejan. It's up to you. Once again, this is where, you know, it's not hoping and praying. You're not deciding when to enter. It's up to you. You can enter for the very, you can wait to see if the very next bar exceeds it, or you can just place your order down 25%. It's up to you. You know, we just leave that as something that you find that meets your needs. We have aggressive traders who say, I'm not going to wait to see what the next bar does, how high it goes or how low it goes. I'm just going to enter my order down 50%. And others will say, no, I have to wait to see that we went a little bit higher before I enter my order. There's no right or wrong answer. The only right answer is what makes you feel comfortable. So this is what we say. All of our students should paper trade the techniques such as the ones I just shared with you. Paper trade them to see what works best for you. Okay. Let's see. Next question is, are these available on Trade Navigator platform? Unfortunately, they're not right now, but we have plans to have them in the very near future. We've had discussions with Trade Navigator, so we should have them very soon, okay? Let's see, do you trade, are you able to execute trades outside of regular working time or stock exchange? Yes, you can. I mean, there's nothing wrong. I believe the question is, can you trade the Globex or the overnight sessions? Yes, you can. Now, as long as the strategies that we teach or the techniques such as the PET-D are able to generate, you know, bars or setups, sure, you can trade any time frame, Globex, overnight sessions, as long as a setup is generated. Now, we can't guarantee that a setup will be generated because maybe even though we don't look at volume, we don't look at support and resistance levels, we don't look at what the institutions are doing, we don't care about those things because there's no consistency in them. We mainly look at patterns or just a few small indications. And if they're not available, well, then it will not generate a signal. Excuse me. But if they are generated in the overnight sessions, sure, a signal is generated. I oftentimes, when I'm very busy in my teaching and in my webinar schedule, I know I will not be able to trade during the regular session. So I'll trade 3 hours before the opening. I'll trade the Globex overnight session for the futures markets. And you get many signals that way on an intraday basis. So yes, it's up to you. Let's see, do you trade them? Next question, Mr. Lee. I have listened to several of your webinars. I am impressed with your methods and have traded since 1998. Can you send me a similar or something that details your course from the suggested beginning? I am getting a little confused with all the different courses offered. I totally understand, or we don't want to confuse anyone because our credo is to keep things as simple as possible. But Jay Lee, the thing I would suggest is contact Pro Trader Strategies. They market and promote all of our strategies, and they're very qualified traders. They're consultants. They can put you in the right direction, what you're looking for. Please, I don't want you to think that, well, Steve's been trading for nearly 40 years, so I guess, I'm not qualified to trade these. I've only been trading for 2 weeks or 2 years or 2 months. We have people that have been trading that just started in the last week, and they get the same rules, the same strategies as hedge fund managers. The only difference is once you get the basic formats, then you have a mentorship with me, a correspondence, and we try to mentor and we try to figure out how it would best suit you. Do you want to enter down 50%? Do you want to use the PET D? Do you want to get in and out quickly? How many times a day do you want to trade? Do you want to be intraday trader? Do you want to trade weekly charts? That's where the mentorship comes in, and then we format it, structure it to make you feel comfortable. So everyone, whether you've been trading 30 years or 30 minutes, gets the same basic strategies or formats. Same with the PET D, and then we leave it up to our correspondence and our mentorship to make something work that fits your needs, okay? So I would contact Pro Trader Strategies. They can put you in the direction you're looking for. And then another thing I want to mention, with this money management combo we're offering today, you're a lifetime student of mine. You have lifetime correspondence with me. So it's not like, well, these things are only lasting for 6 months, then I have to pay another, I have to re-up again and have an upward sale. No, I mean, it's yours for life. The PET D is going to be yours for life. There's never another charge you have. The 7 Secrets Money Management course is yours for life. And my correspondence is yours for life. As long as whoever outlives each other, you'll still have correspondence, okay? Once again, Paul's asking what platforms do these work. We just went over this: MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use the free stock data to run on NinjaTrader. And we help you set that up. So if you're not familiar how to do that, so there's a lot of different opportunities on how to use all of our strategies and PET D and all of our tools, different markets and different charting platforms. Let's see, I don't want to skip anyone, so I'm just see. Does the tool give you a buy-sell signal, or you have to find yourself when all the rules are true? No, I think what you're asking is, does it tell you where to get in, or where the buy signal is, or where the sell signal is? In other words, the strategy. We didn't go over any strategies today, so I think we're on a different question here, the strategies will tell you where to buy and where to sell, and it will, if you get the add-ons, if you get the courses that come with the add-ons, it will generate an indication telling you that it is a buy or a sell signal. All right, so you'll see it right there on your platform, either a little dot or an arrow telling you to buy or telling you to sell. But please remember that we only give these as educational tools. I do not want you to rely on them and say, well, I don't really need to understand why I'm buying here, because a green arrow was generated, so that's all I got to do is just buy it. And that goes against everything we teach. It goes against our philosophy. Remember, we're an educational company, and I want you to become a part of the process. I don't want you to rely on an outside source, even if it's just an up or down arrow. I want you to know why you're buying and why you're selling, and those indications are only there as educational tools, just to check your work as you're beginning to understand the process, so you can realize if it was a valid setup or not. Okay? But once you know it, I don't want you to rely on them at all. You should know where you're going to be buying and where you're going to be selling automatically. And it doesn't take a lot of hard work, just some practice, okay? Let me see here. Yeah, everything that we have will ultimately be available on the Trade Navigator platform in the near future. Once we get the go ahead with them and are put together all of our plans with them, we'll have the add-ons as well as the PET D as well as the strategies available on their platform. But it'll be in the near future. Okay. Let's see a few more questions. So once again, if you're interested in this, remember we have that deep, roughly 25% discount. Contact Pro Trader Strategies. We realize that if you can't come up with that full payment, you don't have to worry about it. You can just come down with a small lump sum and you will be up and running with instant access. So you just have a payment plan structure. Contact the people at Pro Trader Strategies. they can put that together with you, and you can be up and running as early as today, okay? Peniel asks, what time frame do I trade, or what do I suggest? Well, once again, Peniel, as I've stated, that goes against everything we teach. We want to make sure that you don't rely on what someone else trades or what time frame they trade. That's a recipe for disaster. If you are concerned with what someone else trades, what time frame or what market or what the best one is, I can almost guarantee you're going to lose because you're not sticking to what feels comfortable for you. So what we do is we work to find out what the best time frame is for you. In other words, we have students in over 85 countries. We have students in every state in the United States. Everyone trades our strategies with different time frames and different markets because they're trading what feels comfortable to them. We have some students that swear that the best way to trade, let's say, one of our strategies is on a 5-minute chart. We have other people who have the exact same strategy who say, no, I only trade it. The best time frame is on a daily time frame. So what they're basically saying is that's the one that works best for them. So it doesn't matter what time frame I trade because that's, what makes importance is what you feel comfortable with. And the reason why I'm not being arrogant or standoffish is because I don't want to get into that realm where I'm telling you what I trade so that you'll copy me. That's the recipe for disaster. Trust me, if all we had to do was copy someone who trades, then it would stand to reason that everyone would be successful. But it doesn't work that way. I know traders who copy exactly what successful traders do, and they can't make any money because why? They're not trading something that makes them feel comfortable. Okay. Let's see. I'm looking for a question from Rudolph. He said I never responded to his question back there, Rudolph. I'm sorry, I didn't see your question. If you can state it again, I just may have passed it over because I have a number of questions here. John is asking, will PET-D ever be available for stock charts? John, unfortunately, it's not possible to run on stock charts. There are no other free charts we can run PET-D on, though, if that's what you're looking for. Unfortunately, it's just not available at this time. Let me go down here to see if Rudolph has asked again. Mr. Lee asked, Jay Lee asked, if you use a slow stochastic, do you trade off the intraday measure? I'm not really sure what you mean by how. I mean, in other words, how are we using the slow stochastic for what purpose? You would have to go a little bit more detail, Leah, on that. And let me backtrack here to see a question by Rudolph. I don't seem to find it. In fact, I don't even see it, the question here. So I'm sorry if I didn't answer it. Maybe there was something in the actual question and answer phase where it didn't pick it up right because I don't see you asking a question. If you wanted to ask it before we sign off, I'd like to answer it, but we just have a few more minutes. Oh, okay. We're just going to send it to Pro Trader Strategies. All right. In closing, remember, once again, these are two separate courses that we have at Specialist Trading and Pro Trader Strategies. Money management, which is extremely important. I give you all the different techniques and things I've learned in my 38-year career on how to apply proper money management. I just gave you 2 techniques with structure today that would increase your odds for success tremendously, in my opinion. We have tons more money management techniques included in that with the PET-D. Now, students have purchased both of these separately, and they told us how well they work together in being consistent with their trading. You can apply these, the PET-D as well as our money management techniques, to any strategy. So let's say you have a strategy that is not one of mine that you feel very comfortable with. Well, it's perfectly admissible. The money management and the PET-D can be applied to them just as well. Okay, so they work tremendously. So we decided to put this 7 Secrets Stock Exchange course along with the PET-D together to make our money management combo. And that's why we're offering this today. And we've reduced it nearly 25% off of the standard price. Now, if you still can't make that payment, don't worry, we're offering you a payment plan. So this is a great, great deal, but it's only going to be for a short time until it goes back to that normal price again. And we'll also be talking about strategies and other presentations to come. So if you're interested in this, I strongly suggest to increase your odds for success with money management as well as the PET-D to take advantage of this deep discounted deal. Remember, contact the good people at Pro Trader Strategies. You see their email address right there. trading@protraderstrategies.com. You can call them directly at area code 310-598-6677. Put together that payment plan, or you can go just directly and get that discount by clicking on the link. Now, that link you see below is not live, so all you have to do is to go to the chat box in your GoToWebinar page, and they've posted that live link. Okay, I'm going to leave this up here before closing. I'll go and show you our disclaimer one last time. But before we close, I just want to say thank you so much for attending. I really feel strongly that these techniques will get you on that level of consistency that you've been looking for. And I look forward to all of you becoming members and students of mine at Specialist Trading. Thank you so much. We shall see you next time. Bye-bye.